Hey guys, good morning, welcome to the live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HEMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips, and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Recording in progress.
Hey guys, welcome. Good afternoon. Thanks for joining Stocksnipertrading. My name is Ron. My partner is Dave. Guys, welcome. Beautiful buys right now on US 30. Oh man, this is like a similar pattern to what we had yesterday, but now there's an imbalance that needs to be filled, and it's really moving through here. So yeah, Sean, you snagged 30 pips. I believe you. That's beautiful, guys. We'll explain this setup because see what I mean? If we start to learn these patterns, you're gonna start to see these more often, and then you're gonna start to not necessarily memorize these patterns, but you're gonna get more comfortable with seeing these. Like here's that double bottom similar to yesterday, continuing to close above the pullback. We'll talk about fair value gap, or the way how I call it, the chicken wing box, whatever you guys want to call it, and now it's pumping right back out of here. But we will talk all about this. This is a beautiful move where they pinned it down there, and that's it. And we started to reverse now, filling the imbalance to the left of the chart here. There's not a lot of traffic. We'll talk about traffic zones and things like that. This is a nice possible fill to come maybe up into this area. Okay, so I know most of you guys got those pips in the group, so congrats. I'm very happy about that. Okay, so let's get started. Everybody, thank you everyone who's joining on Zoom. I appreciate all of you guys. Thank you everyone else on YouTube. If you guys can hit the likes, if you get value out of our channel at SST, if you guys are learning daily with us, please, we appreciate the likes. Help grow the channel with us. We want to give back free education to the world and help out everybody. Okay, so thank you guys. That's number one. Appreciate all of you guys. Number two, it's a busy day here at SST. We have live London. We had Dave in New York. We had Shahab in London. PK Post. Myself now jumping in. And then at 6 o'clock later tonight, we're going to have a webinar series, class number 1. So everybody on Zoom, get ready. It's going to be trading, going back to the basics. Let's learn as if today everybody's are we're learning day one. We're coming into the markets and we have no idea what's going on, but we're going to use all of the knowledge that we've learned over the years, and go back as if today is the first day everyone is starting to trade. I believe personally, if you really want to take trading serious and you really want to learn how to trade, we're going to ignore making money. Okay, I know that everyone's goal is to make money in trading. That's obvious. But if that's your only motivation, then you're going to have a tough time trading. You got to have maybe a passion to trade. You got to have a passion to learn more and more daily. That's how you're going to become a better and consistent trader. It's not just chasing the dollars. It's not just chasing the money. If you do that, you might not take learning as serious. Okay, so the money will come after, once you learn how to do things. Anything in life. If I want to become a doctor, I can't just go become a doctor, and I have to learn years, 5, 10 years of post education. It's not easy, but I know if I do that, I can become a doctor, and then I know doctors make a lot of money. But at the beginning, doctors don't make any money. They're spending money on education. They're maybe $100, $200, $300,000 in the hole in debt before they make any money. So think about yourself as a trader too. You probably are in debt right now if you keep losing and losing and losing. So maybe we got to go back and learn the basics of how to trade and do this properly from day one. Okay, so I'm very excited about that. That's going to be in our webinar later tonight. And we'll do some series like that also on YouTube, but we're really going to focus on our members in the Zoom to get them ahead. Okay, so let's get started. Let's go through the motions. Okay, so if you guys are in trades, congratulations. Okay, I'm very happy for you guys. I hope everyone is either in profit or at a break even, and managing this trade. It's beautiful. We're filling in balance. Over here, what we have is Bookmap. This is a live liquidity platform. There's various platforms that you can get. This is giving us a live look in the book of US 30 right now. So this is to help complement our trading, because in candlesticks we can't really see what's going on in here. We can actually physically see now what's going on in the book. So these are our bids below us, our offers above us. This is the current order book. We're above the VWAP. We've been above the VWAP basically since we dipped down here. It came down there, swept the liquidities, took out the lows, and we've been continuing to fill up the depth of market with nice solid bids. Every pullback is getting bought up, and we're continuing to make these higher highs and higher lows coming out of here. So what we're going to do is let's just go over the news. Maybe we're going to have some news that we're going to trade. So get in the habit of doing this. Okay, there's multiple fundamental websites for free that can give you economic data. Okay, you don't have to always use Forex Factory. This is just quick. It's basic. It's free. It just gives you a quick little throughout the day what's going on. All I see is yellow folders. Okay, so right away when my eyes see yellow folders, they're low impact. They do have volatility, but not as much as if there was red folders in here. And sometimes Forex Factory is lacking. They don't show everything. So then there's other platforms. There's FX Street, there's investors.com, there's Financial Juice, there's Bloomberg, there's so much other resources, Market Watch, all kinds of things. Just find one that you're comfortable using and you understand what's going on in the market. So we don't have much today. Tomorrow, however, Thursday, you can see 8:30 a.m. Eastern. Just by looking at that visually, I know that there's going to be a lot of volatility in here. Okay, so tomorrow 8:30 we have USD CPI month over month, USD CPI year over year, USD core CPI month over month, and then we also have every single Thursday we have our unemployment claims come out week over week. So this is big. So just by looking at this, I know tomorrow around this time, COMEX market opens up, then we got this 8:30 news. I know there's going to be a lot of volatility. I know that the spreads are going to be increasing. I know that there's going to be a slippage in the market. So you really have to think, do you really want to go and trade this, or maybe wait and see patiently how the market reacts to this news and maybe react after the fact? So some traders wait for the news, dissect what's going on, see what the market move is, and then they trade. Other traders who like to scalp news, they like to scalp this stuff. They like the volatility, but maybe they have experience how to do this, and they're risking, and they have the proper risk management to do this. So right there tomorrow, I can see that there's going to be volatility tomorrow. Okay, so today we don't have much. Now going back to our charts over here, on Discord, okay, I always put something, not for motivation, but to help what we're going to be talking about going into our webinar today, later on. Just things that, remember, we were talking about bad habits, things to improve on. Hopefully some of you guys thought about that, and maybe you guys are help improving yourselves. So these are just a few things. What are the most critical aspects of trading? Okay, so number one, risk management. Okay, we're going to keep repeating this like a broken record, but finally when it gets in your head, you're going to understand why we keep repeating this. There's a reason why we keep talking about risk management. We want you to be consistent as traders and use the proper risk, because if you don't use the proper risk, you're probably going to lose a lot of financial money in these markets. So proper risk management is essential to trading success. I don't know how else I can stress this. I don't know. Every single day I'm telling you guys. Some of you guys are taking it to heart and you guys are really respecting your risk management, and some of you guys are actually compounding your account. I cannot believe it. How many traders in our group now, we have month over month success. We have month over month payouts. I've never seen this before. It is unbelievable. We have traders in our group now moving on 6 months, 1 year, from losing money to being consistent now. So I asked them straight up. I had a one-on-one with them. I asked them, what are you guys doing differently? It was simple. Risk management. That's all it is. They said we were over leveraging, we were over trading, we had no idea what we were doing with the maximum risk, and we kept losing. And now they understand it. So all they did was decrease and use proper risk management, allow trades to breathe without panicking, and now they're seeing more consistency. So this is the recipe, guys. This is the recipe for success. If we're making pancakes, we got to have the right recipe. Okay, once you got the right recipe, you can eat some good pancakes for the rest of your life. Traders should determine their risk tolerance and set appropriate stop loss levels to limit potential losses. Read this carefully. Their risk tolerance. Okay, so you need to set your own risk tolerance, not me. Okay, I can't set your risk tolerance for you. I have my own risk, but my risk is completely different than your risk. You have no idea what type of capital I'm trading with, so my risk is obviously going to be completely different from yours. Yours is going to be completely different from someone else. So what you need to focus on, I feel this is where a lot of traders are lacking. They're looking at other traders, what their risk is. So you need to focus on your risk. Maybe if I risk 1% today, that might be maybe too much for you. Maybe you only want to risk 0.25%. So don't look at others. Okay, I think that's one of the biggest pitfalls in trading, is we're comparing ourselves with other traders. Don't do that. Okay, stay in your own lane and understand what it takes for you to be better. Okay, so risk tolerance. Know what your risk tolerance is and set appropriate stop loss levels to limit your potential losses. We still have traders today trading with no stop loss. They get into a trade and they're holding it for days and days and days, and they're hoping and praying. The market doesn't work like that. We don't trade to hope and pray. You got to trade with a plan. Every single time you hit the buy and sell button, you have to have a plan. If you don't have a plan going into that trade, don't take that trade. Does that make sense, guys? Okay, if you do not have a plan before you get into that trade with an end result, whether it goes to TP or it goes to your stop loss, if you don't have that in place, do not take the trade. Please, guys, listen to what I'm saying. Understanding position sizing, using leverage wisely, and diversifying your portfolio are also important risk management strategies. Diversifying your portfolio, that's more stock and options. We're going to get into that program coming soon, but that doesn't relate too much to Forex. That's more diversifying your risk in certain sectors, how to protect your account over there. Okay, so number 2, fundamental and technical analysis. These are pillars of success in the markets, but I know a lot of traders who master technical analysis and fundamentals, and they are masters, like better than me in this, but they don't have proper risk management and they still cannot get ahead. So just because you learn price action and you learn how to read an economic folder or economics, that doesn't mean you're going to be a successful trader. Okay, it takes more than that. There's a lot of pillars that you got to put together to be a all-around good trader. So you have to work on these skills as well, but this is not just, if you master technicals, that doesn't mean you're going to be a successful trader. If you know technicals but you have no understanding of risk management, you'll probably still lose. Okay, so fundamental technical analysis, traders should be familiar with both fundamental and technical analysis. Fundamental analysis involves studying macroeconomic data. If you choose to do this, this is like a little bit above and beyond if you want to get into the macro geopolitical moves of the market, company financials if you're trading options, news events, and other factors that can impact the value of an asset. Technical analysis, on the other hand, you guys know, involves analyzing price charts, patterns, and indicators to identify trends and potential trading opportunities. Okay, so I'm sure most of you guys have a good understanding of fundamentals, technicals, but we'll get a little bit more in depth in that. Number one, risk management. Please, guys, that's the most important one. And then number three, emotional discipline. Emotional discipline is crucial for traders. Okay, we trade off of emotions, humans. Okay, that's how we are. So this can either make you or destroy you as a trader. Okay, please listen to me. Pay attention. Emotional discipline is crucial for traders. It's important to keep emotions like fear and greed in check, as they can lead to impulsive decisions and adverse outcomes. Maintaining a trading plan, sticking to predetermined strategies, and avoiding emotional trading based on short-term fluctuations are all essential for trading success. I believe, like, this is me saying this, and myself too. I trade, like, I mimic my trading like I'm a robot. Okay, because I come in the markets, I look exactly for what I'm looking for. I have a plan going in. The plan will either go to profit or it will probably go to my stop loss. Okay, but I'm doing it with the proper risk management, and I just trade that plan every single day. I don't get caught up on emotions. I used to. There was times when I used to panic when I used to get in a trade, but obviously I was over leveraging. I was over trading. I knew when you panic in a trade, right there, you should be questioning yourself. I can tell you right now for a fact, you're going too big for your account. If you're panicking, there should not be panic in a trade. You shouldn't panic. Okay, if you've done the proper analysis, if you've done everything, and there's not much more you can do, and you're using the proper risk management, let the trade play out. Let it play out. Just let it go to either TP, or you can manipulate your stop loss. We'll teach you how to do that as well. And then also reward yourself along the way if it's going towards your target. You don't have to wait directly for it to TP, but if it's coming close to it, you can start to scale out and learn that as well, that approach. And then finally, guys, remember, trading involves risk, and it's always a good idea to do thorough research, seek advice, and continuously educate yourself as market conditions and trading strategies can change over time. We see that daily. Okay, the markets can change in a heartbeat, so you got to be able to react how the markets move fast. Okay, so this is important to me. That's why I spend time talking on this. Yes, we can go right into the markets. We can start trading candlesticks and things like that, but everybody does that. We need to focus a little bit more on more important things in trading. We've done enough trading live in the last 3 years to prove that we understand technicals and fundamentals. But what sets us apart is our risk management and the way how we're psychological traders, and we understand the swings and the emotions that we go through. I myself have gone through all of that, so I've learned from it. So that's why I want to give as much knowledge as I can, how I changed as a trader, to hopefully inspire you guys to be better traders. Okay, we're all here, one community. Whether you're on YouTube or you're in our Zoom, it doesn't matter. You're all in Sniper community. We all respect everybody here. YouTube is strictly, we're trying to help educate for free around the world. I come from a poor country. I wish I had this type of education. I had to unfortunately pay a lot of money for my education at university, the Toronto Trading Academy, and things like that. And I didn't learn anything about what I'm doing today with that type of money I spent there. So I believe that this can empower people around the world when we need this. So please, guys, all we ask on YouTube is a like button. Just hit the like. If you enjoy what we're doing, it keeps me and Dave motivated to keep coming on here on YouTube and keep us doing this. We've been 3 years strong. We want to go 30 years strong. But just please, guys, if you're getting education, it helps me and Dave as well. If I see that there's likes on there, I know that we've helped 200 people today. If we come on here and there's no likes, then obviously then nobody likes what we're doing. And I believe that this can change your life for the better if you guys really take trading and learning serious. Okay, so let's get started into the markets, because I can talk psychology and emotions. That's what I'm really passionate about all day, and we're gonna do that in our webinar later on. But let's see what's going on in the markets. Okay, so let's take a look at US 30. Okay, I know some of you guys are trading all different securities. Some of you guys are trading SPY. Some of you guys are trading NASDAQ. Some of you guys US 30. Some of you guys gold. Some of you guys oil. Maybe GBP USD, Euro USD, NZD CHF. Whatever you guys are trading, it's all good. Okay, it's all good. It's price action. Okay, we're gonna, whatever chart we look at, there's gonna be red candles and green candles. They're gonna be making patterns in the market. They're gonna have different volatility. It's just whatever you're trading, understand what you're trading and get to know its behavior. I can't stress that enough. So right away, right now, we are on US 30. So right away, my brain is thinking, I'm trading an index related security right now. This has a different volatility from if I was trading GBP USD an hour ago. Okay, so you kind of got to switch right away, like a robot. You got to switch and understand what security you're trading, because right away, there's a different risk involved in trading this. This is a very fast security. If you are a beginner, I highly recommend and suggest that you stay away from fast moving volatile securities until you get the experience to learn how to trade these things. Trade something that's a little bit more technical. Trade something that's a little less volatile. If you're wanting to learn Forex, stick with currency. Stick with GBP USD, Euro USD. They are one of the most liquid currencies in the world, and they trade very technical. They can't get as manipulated as other securities like gold and things like that. So it's a good to get started trading that. You can understand that you can learn more as it moves. Then when you learn, you can start to advance your trading and come into more securities such as commodities, gold if you like, or US 30 and the indices. Okay, so number one, what I do when I trade, okay, I have a daily routine. I go through every single day, and I stick to this routine, because I know if I don't do this, then I know something is wrong. I know something is not right. So I always start off with the daily. I do a top-down analysis. This is what I do as a trader. Do other traders do this? I don't know. Does it help traders? I don't know. This is just helps me as a trader. I'm just telling you what helped me, because before, when I was learning how to trade, I would just jump in the 1 minutes like this, just jump in the markets and just start trading right now. Okay, this is all I would do. I see it made an uptrend. We're in here now. Now I'm just getting involved. I have nothing here. I don't know what today's high was. I don't know where the low was. I have no idea what's going on. I'm just jumping into a market. Okay, when you get really good and experienced, you can absolutely do that. But for a beginner, do I recommend doing that? Absolutely not. Okay, so what I recommend is starting off with a top down. You don't need to spend half a day doing this. Okay, tops, when you get good at this, 3 to 5 minutes maximum. Okay, it all depends on what you're looking for. I like to explain things a little bit more in detail, so it might take me 10 minutes, maybe 15 for a thorough analysis. But for you guys, when you get good at this, you can identify zones in a few minutes and you're good to go. Mahesh, sorry if I pronounced that wrong. Thank you for the donation. I appreciate it, honestly, from the bottom of my heart. I appreciate it, but we don't ask for that. Okay, I would rather you keep that money in your trading account to continue to compound that. I just want to make it clear, all donations to this channel go towards organic growth and growing this thing. Dave and I don't take your donations or anything like that, but we do appreciate it. But you don't need to do this. Okay, this goes for everybody on YouTube. Just please, all we ask for is a like. We don't ask for any donations, but thank you so much, guys. If we can thank Mahesh for that donation, thank you, bro. Okay, so going forward, this is our daily analysis. So remember what we were talking about yesterday? Do you remember that 5-minute play on NASDAQ where it was that nice clean double bottom like this, and then we got the volume closing above this area? That's the type of play we had yesterday on NASDAQ. It was kind of trading against the grain. We were counter trading that move, but it wasn't just a single leg up, it was a double bottom. So we got kind of double the volume holding this area, and it broke out and closed above. Then we get a little consolidation, then we continue moving up. So just by identifying this type of pattern, like, get to know this pattern. This might be your money pattern daily. If you understand, but the behind the scenes, what is a real double bottom? I know we can see it here visually, but what is happening with the volume? Why is this being created? Then when we dissect that, you're going to start to understand what this means. And then when you see this play, then you're going to know, add this play in your playbook. You should have a playbook. Every trader should have a playbook. And in that playbook, you should have maybe your top setups. I call them the A+ setups. Every trader should know what their A+ setups are. If you don't know what an A+ setup is, an A+ setup is a high probable trade setup with maybe a 75% probability rate or higher. And when you see this setup every single day and it's your go-to setup, then just go through the motions. Trade it with the proper risk management, and you're going to start to see maybe you're going to have more consistent trading, and you're getting more patient and you're getting more disciplined because you're waiting for this setup every single day. Is it going to work every single time you see this setup? Absolutely not. I would tell you guys right now, if this setup was guaranteed to work 100% of the time, I would tell you guys the honest to God truth. It's not. Nothing in trading is guaranteed. I just want to make that clear to everybody. So if you're striving to be a 100% trader, I don't want to burst your bubble or anything like that. You might have a day where you trade 100%, you take 5 trades, you're 5 of 5. You might have a fantastic day, you take 8 scalps, you're 8 of 8. Yes, you can do that. But to be 100% all the time, forget about it. You can be a 70% trader. You can even be a 60% trader with a proper risk management with a 1 to 2 R&R, and you're going to still make money in the markets. It's like if you flip a coin and you're right 60-70% of the time with the proper risk management of a 1-2, you're going to eventually compound some money. Yeah, you don't have a perfect perfect record as a trader, but proper risk management is more important than being right 100% of the time. Okay. So we broke out of here just looking at this analysis. So lots of volume accumulated here. This big body candle over here on June 2nd is still holding 50%. We'll go more into 50% trading and things like that as we get to know more and more about trading. But we came up here, so we can see this is like a monthly high up here. We're starting to get some resistance. We came back up. Yesterday was a bearish day, come all the way back down, then it came back up and it closed as a hanging man candle. Today we opened. Okay, so what happened? We opened and we came almost 50% of the body. Did we come up to the previous highs? No. So that is a technical lower high in the market. The supply is being reduced. The offers are being dropped. You got to understand how an auction works. Okay, you're trading at an auction. Okay, this is what's happening. It's an auction. There's an asking price, there's a bid, there's a seller, there's a buyer. Okay, so as it came up here with the buyers, it got rejected there. So that's telling me that that's now an area of resistance. Okay, and I mark it the high of the day with a purple line. Just in case we ever do come back up here, I want to know how it will react at the high of the day. If it comes back up and we break the high of the day, where's the most logical area it's going to probably move to? Maybe it's going to test the top of here. Okay, that's like, if you're just asking me logically, where would the volume move to? It's probably attracted to that area. Why? Because this is a critical area in the market. Look at where it punched out here, impulse, and came back and closed below the yellow line. Another day here, Thursday, impulse breakout, took out the high a little bit higher, but it came back and it closed down here, closed below the yellow line. We've got another daily candle that impulsively broke out, nothing happened, came back and closed below the yellow line. Finally, we get some volume close above and it retested and punched out. But look, it couldn't even take out that high. That is a clue. price action gives you clues daily, but a lot of traders are not looking into these clues because they're not dialed in to watch candlesticks. They're just, I don't know what we're looking at, but price action traders, this is what we look at daily. Okay, so think about it. If we came up and we closed with all of that volume above that yellow line, and look at this retest, it opened red and it came down, grabbed some liquidity and came back up and pushing up. A daily candle should have had that momentum to break this previous high and drive a little higher. The market did not allow it. They shut it down right there. Okay, so you can see that this is some serious supply in the market. So when we start to see that, you've identified a zone, whether it's 2 bars. And what I mean by bars are candles. Okay, that's another way how we call candles. We call them bars. Have you guys heard that before? Candlesticks, also called bars. Maybe it's too old for you guys. That's how we used to call these things 15, 20 years ago. Bars. This is the present. Sorry guys, I'm having some problems with my internet right here. Is everything okay? Zoom? Russ, all good? Guys on YouTube, did anything happen with the internet? All good, guys? Okay, maybe Rogers, that's Rogers stepping in. We probably have to short Rogers again. I'm just playing. Okay, we're all good to go. Okay, so what we see right now is a serious area of rejection. So we have to make note of that. Okay, so what I do is we've established a zone. Now, price action, it tells us what's going on in the present time right now. We can look at historical data to see what happened in the past, and it's up to you and I to predict the next future moves. That's what trading is. You're just making predictions, educated, calculated, probable position predictions where it could possibly go. So what I like to do is when I establish a zone, I bring this zone across. How far? Someone asked me, Ron, how far do I bring the zone? You know what I tell that person? As far as you want. Bring it. Okay, let's look at the dates. Okay, here's today. If I bring it over here, I'm going into August 17. Okay, if I bring it over here, September 1st. If I bring it over here, I'm going into October. Okay, bring it as far as you want. Bring it into 2030 if you want. It doesn't matter. Don't get caught up on where. Just bring it across. You've identified a zone. Okay, so it's acting as resistance. The more it comes up here to resistance. Okay, let's just go back to the basics. What is resistance? Okay, I can't believe still to this day how many traders don't understand the difference between support and resistance. Okay, let's just go back to the basics. Resistance is like a ceiling. Okay, you know when you live in your house? I'm in the basement of my home right now. Okay, I'm in the basement. The floor right above me, the ceiling, is like a resistance to go to the main floor of my house. That's a resistance. If I go up now, if I go upstairs to grab a drink, I'm on top of the ceiling, okay? So I'm above resistance now. What will that floor turn into? It turns into a floor, like a support now. Yes, perfect. So resistance can turn to support. My next area in my house of resistance is my roof. Okay, that's if I can go on top of the roof. If you guys see me go out there and I climb my house and I go on the top of my house, yeah, I'm above resistance. So if I'm sitting and waving to you guys on top of my roof, that roof becomes support. I know it sounds silly, but that's what trading is. Okay, so this area is resistance. We might come back up to it, but the only thing that will dictate is how much orders there is in the market. And after time, like right over here, this can start to become supply in the market. Okay, if we have more market makers putting in offers here, more offers here, and at a later time when it's coming back up here, and then we'll look in the book, we'll see current order book, like right over here, you can see above 35,360, we've got 88 offers. That's a bigger block up there. So more and more offers come in the market will start to make supply in the market, and the more offers that come, then the bigger the supply gets. But if we break out of here, like again, my analogy, there's my floor, my ceiling. Okay, let's say Ron goes upstairs to the next to see what my kids are doing upstairs, and I'm up there now. So now I come back down. This is a floor or a support level. So what I do is I naturally just change the color. I've been doing this since I started trading. I don't know why, but I'm a visual person. I like to see visually what's going on. Yeah, we could have kept a neutral line, but I like to show my eyes to see green. When I see green, green acts as support. Okay, so if we ever come back, this is the analogy of a breakout and a retest. Okay, so just going back to the basics. Guys, if we want to go into trading, let me know. Do you guys find this stuff, like, does this help you, or is this too basic for you guys? I'm not here, I don't want to waste anyone's time. If you guys want to get into trading, we can go right into trading, but it's just going to be another trading session. I feel like we need to learn this stuff, and then we can continue trading, but then we get everybody on the same page of what we're doing here. So let's just go back to the basics, guys. I don't know how to stress this. Okay, there's going to be lots of time where we're going to trade live together, but let's all understand what we're doing. Okay, please, it's very important in my opinion, and then everybody's on the same page. Okay, so very simple. We broke that red resistance, so that causes, you ever hear the word imbalance in the market? Okay, we hear everyone throwing around that term imbalance. And imbalances in the market is when you do something that changes the order flow. Okay, so if this area was red, 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 and now it breaks above it, that's going to cause an order flow imbalance, because now that's going to change the depth of market. So it's just like at an auction. Okay, so if something happens at an auction, it's going to change everything. It's going to change the buyers, the sellers, everything. It's going to change, it's going to impact the whole entire auction. So it's a price difference. And when it's moving somewhere, that's what we call price discovery. Okay, price discovery is when it's moving above an area and we don't know where it could go. It's discovering price. That's why we use historical data in the past to tell us where it could possibly be going above here. So we look to the left of the chart. And what I mean by looking to the left of the chart is if we bring this box across there, see this impulse breakout right there? That was a price discovery where it came out green above here, no more new higher highs, and it went down. That's what we call a fake out in the market. Okay, how many of us have been faked out of the market? I raise my hand. I've been there millions of times. We're all going to get faked out of the market no matter what. Okay, on any time frame you trade, the market is always going to fake us out. Our job is to limit how many times we get faked out of the market. So one way to limit how many times we get faked out of the market is by being patient and disciplined. Okay, that's what trading is. If I learned how to be disciplined when I was 18 years old, when I started trading, my journey would have been much, 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 much different. Okay, so discipline, we always say this, you need to be patient and disciplined. Why? It's to avoid possible fake outs like this. Okay, you're not going to be a 100% trader. Even if you're patient and disciplined, you got to come to terms right now. If you're telling yourself you're going to be patient, disciplined, wait for bodies to close, you might miss out on impulse moves. You might miss out on an additional move, but you have to come to terms with yourself, because there's no, in my opinion, there's no woulda, shoulda, coulda, I could have done that. When you have an established plan every single day, you got to stick to your plan. That keeps you consistent. If you keep changing it daily, today I'm going to go with an impulse break. Today I'm not going to wait disciplined. Today I'm going to do something else. Today I'm going to do that. You're just all over the place, and then you're just going to cause yourself to be inconsistent and then just guess every single day when you're trading. So right there, but that was a previous high above here. So I like to mark that zone at those previous highs, because if it ever comes back up there, that was the previous high. If it comes up and breaks this previous high, I can see exactly where it could possibly go. Where was the next area that there was some resistance in the market? Just look at your price action. It tells you the story. Over here, it came up the first move and then pulled back down. We pulled higher, came back down, respecting this white line. Then look at the wicks. There was an impulse break, volume closing below this white line, then the move pushed down. Again, we came up to the white line, pushed down. Here we actually closed above the white line, so we went for a new high. Over here we closed below the white line, look at the retest of the white line and pushed down. And then when we came back up, it was a lower high. So we now are finding another area of resistance in the market. If I continue to do this, there's another area right up here. I got those wicks, I got that wick, I got that body closing above, continue to push up. There's the body close below, there's the retest, and right there, another zone. If we come up to here, that's another zone. Okay, that's all-time highs. Okay, so if you want to figure out where your all-time high is, this is your all-time high. Okay, now let's go back to the daily. Okay, so now we got some zones above us. So what I just did was, these white lines are resistance, 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 all-time high. Does that make sense? So now these are zones. These are specific zones in the market. So if volume trades up here and we break out of here, that's the impulse break. If we break out of here, we could possibly come up to the next zone. And when we get up there, resistance. What could happen when there's resistance up here? Red box, right? A new ceiling in your house. And if it's coming up here, what could happen? It could break right through impulsively and maybe retest, and then now the resistance turns back to support, and maybe we're picking up bids and then it's continuing to go high. Another option is it could get rejected here and come right back down. Okay, so you got to know that these are zones where it could trade above and below. Okay, and we can further get more technical inside here. I'm just trying to get back to the basics for everybody. Just what is going on in here. Okay, just understanding simple support and resistance. And when we establish a zone, bring it again in the future. And at some point in time, maybe the liquidity will come up there. At some point in time, maybe we get rejected and we come back down here. And then it could come back up and try again, another attempt to break out of there. And maybe with more volume, more liquidity, it breaks out of here and maybe continues up to there. Okay, so that's what trading is. If you want to trade within these zones, you can, but you're establishing your own. Before I ever had a live liquidity platform, this is how I was figuring out where the offers were in the market and how I figured out where the bids were in the market. Now that I can complement my trading with a live liquidity platform, we can start to see the heat, the blocks coming in the market. So if it complements our zones, then it's adding confluence to my trading. So then it makes me even more confident that, you know, my analysis is like agreeing with the live liquidity. So then it gives me more confidence that maybe if I take a trade, I'm in the right zones. Okay, so that's above us. Okay, so that's all resistance above us. Are we there yet? No. So we don't need to worry about all that. Okay, this is just a more in-depth call. If I was just looking to do my own top-down, like right now to get ready to trade, I see the high of the day right up there, and then I wouldn't need to go and do all this until the volume starts to come up here. Then I would go and analyze up there. But I'm just showing you how to identify levels in the market. Now, today we opened, we came up, got rejected, about 50% of yesterday's volume pushing down. And what happened when we came back down to where we opened? We broke and we continued red, where we almost came down to the previous lows down here. Okay, but they saved it. They saved it right there. That low of the day today, when we hit, I'll show you how it looks on the 5 minutes. That's it. They saved the day there. Okay, so the market said, this is as low as we're going currently today, 35,076, 075. That's our low of the day. The market said no more. This is the floor. Okay, so below here, why did they stop it there? Okay, anyone want to take a guess why they stopped it there? Support? This is critical support. Okay, why? Because this breakout that happened over here on July 20 created those new highs, but no new higher highs. So remember, guys, tweezer tops are equal highs. Very important for price action. We could not create a new high in the market. So then they pushed it down with a lot of volume on this day, August 4, and couldn't continue break. Then they brought it right back up. We came back down. But this pullback is holding this entire structure right over here. Okay, so this is a big demand zone. Like what I would do is from the bottom here to that green candle, this big box area, I would make this personally green. Why? Because over here that started this move, like this ignited candle that started continuing this uptrend. So we're still holding this area. I also like to do like 50% of a previous body, like down here, this big green one right down here, and then I draw my zone across like that. I give it more room to breathe to come down in here, but we can see already, like I can see now from what happened this week, like I can see now. So it's holding right here. If I look at yesterday's wick, it came right into this block, still holding. Okay, so once we see that, like yesterday, if I was just doing my analysis and getting ready for today, I know how I trade and I know what I look for. So I don't want to say this because it's after the fact, but for most of you guys that know and have been trading with me, you guys know how I do my top down. So I would have, and I'm telling you the honest truth, had a green box coming across. And today's daily candle, as it came down in here, then on a lower time frame, I'll show you what it looks like and how you can trade. You know, some successful traders take one trade per day. Okay, one trade per day. How many of you guys take one trade per day? And that one trade per day is your A+ setup. You wait for the market to come to you and you take that trade. You're either going to hit it or you're going to get stopped out. But that's one trade per day. And if you do this with consistency and the right risk management, you can trade stress-free all day, every day. But it all starts with a proper analysis, because then you let the volume come to you. So this is now, we're trading in a zone. This is our supply, this is our demand. Now it's trading in between here. So this is another area, what we have about consolidation. Some traders don't understand the big fancy word consolidation, okay? Think about what is consolidation in your everyday life, okay? Some of you guys have a lot of debt, and then you might consolidate all that debt into one. Like you might have a credit card debt, you might have student line of credit and a mortgage. And then if debt is getting out of control, a consolidation company might come along, a consolidator, take all of your debt, consolidate it, and give you one rate. Okay, so that's what the word consolidation means. It's just in an area where it's just going up and down and it's not making any significant moves. Like you can see, it's not making any new highs and it's not making any new lows. So the market could just continue to trade in here. What is happening behind the scenes is just accumulation, okay, on both sides. So the offers are getting accumulated, the bids are getting accumulated. At some point in time, whoever accumulates more will redistribute that volume. Either if the buyers keep accumulating here, it might come out of here for a new high. If the sellers keep accumulating and there's more offers in the market, then maybe we're going to break down here and come down to these lows. So this is what this indicator is. A lot of you guys don't like see this indicator, but this is cumulative volume delta. So what this is it's like an adding up offers minus the bids, and then it gives you a total number of like transactions. And this is from the time that I'm looking at this. It balanced is 0. Okay, so 0 is over here. That's your balance. That's when the market is balanced. So right now there's an imbalance in the market from the buyers. Okay, so you can see we're above the VWAP. This is the volume weighted average price. So it keeps making higher highs and higher lows. And a lot of the transactions are buy side volume. So we have a lot of buys going on here. So that's why the market today is pushing up currently, is because a lot of these transactions are hitting buy limits, buy stops. There is pending orders like sell stops and things like that. But then that's when you can figure out where's trapped liquidity or short sellers closing their positions down here. So do you guys understand like how short positions work in the market? So if you're shorting a security right? The way how you make money is you got to buy it back at a lower price. So if there's sellers selling, they're in profit. How do they close a position? They got to buy back. So where are the buybacks? It could be buy limits or buy stops. And then down here, they close their positions, and then the buyers are buying, and it continues to come up. The short sellers are closing their position, and buyers are buying it up. And every single time you got to catch where short sellers are getting trapped in the market. Not every short seller is closing their position. Some are adding sells and want to take the market down. But you got to know when and where to do this, because sometimes you're going to get caught. So it's, if you're selling at a demand area, like down here, you have to be very careful. Even if you're buying at a supply area, you have to be very careful, because there was buyers up here at the high, got caught, and then they got stopped out. There was buyers on this day that bought up here and got caught and got stopped out. There was sellers today who were selling down here, and then the market moved up and got caught. Sorry, yesterday. Sellers today continue to sell down into demand, and what happens? The market goes back up. So then they get stopped out. So it's important to understand psychology. Maybe we should start to teach ourselves how to maybe sell at supply areas and how to buy demand areas instead of doing the opposite. Because everyone says to me, Ron, if I was just doing the opposite of the market, I'd be a profitable trader. And I say, why don't you do that? Because they've been programmed to sell here and buy here, thinking that, FOMO buying, it's going to continue driving. But I don't see any volume closing above. So why, the only thing you're buying up here is an impulse. So someone said to me, how do you get more disciplined to wait for bodies close? Tell yourself, on the particular time frame you're trading, you're going to wait for that body to close. That's it. It's when we talk about it, it can be very simple. If you trade a 5-minute candle, wait for the full 5-minute candle to close. That's it. There shouldn't be an argument. Either pick your poison. Do you want to trade the impulse candle and go, and whatever happens happens? There's also a time and place when to trade an impulse candle. If you see the build up, yeah, I love taking impulse candles too myself, but there's always a time and place and looking at the build up to take that trade. Do I just want to take any impulse candle? Not really, not as a scalper, because the market presents too many of them. There's too many opportunities to make mistakes. So try and teach yourself patience, discipline. Yeah, you might miss a trade. Who cares? Okay, it's better to miss a trade and be more consistent over time than just trade everything. It's to help you get more consistent with your trading and help grow your accounts. Okay, so today we came down there. If we come back down today and tomorrow, and maybe we're pushing down levels now. Okay, so what do I have below this big green box? I like to look at these type of candles. Okay, so this big body candle pushed out of here and filled lots of imbalance. So I like to look at half of it. Okay, this is just me personal. I don't know any other traders that do this or whatever. I just, by watching price action, I've seen how price reacts at these levels. So I automatically sometimes I eyeball. Okay, I just look, and someone says to me, Ron, do you look at the entire range from the low to the high? That's only if I'm placing a Fibonacci. Fibonacci, I look for swing low to swing high, or swing high to swing low. So then I can capture the entire wicks, the entire range. But when I'm looking at volume based, I want to know the critical areas, the open of the body and the close of the body. And then I kind of just look where's half of it. From open to close, that's about half of it right there. And then if it lines up with a nice critical psychological area, I know that I'm doing something right. It's at a block in the market. Okay. Another area is, if we continue to push down, what about these 3 wicks right here? Okay. These are important areas in the market. Very important areas. Okay. This wick, when it came all the way up there, it got rejected, and it started a 1, 2, 3, 4, 5, 6 day downtrend. Okay, and then it came right back up with volume. And look, did it come back up to that yellow line? No. So we have a lower high here structure in the market. And then it continued to push down 1, 2, 3, 4 days again, trying to break this previous structure low. It didn't. It failed. And then we come right back up. So that's our double bottom pattern. Okay, so it came down. We made one level of support. There was a lot of buyers interested. We came up, but we couldn't take out this previous high. So then the offers are getting lower, lower, lower. With more offers, more offers, more offers, that makes more supply. Then with more supply and buyers getting tired, then you have the market come back down. And when it came back down here, we're coming back down to an area of demand in the market, because you can look at the structure right over here. Okay, in this particular time, that was resistance, red, turns green with volume closing above, green. Bring the box. If you brought this box across, you traded right into the box. Again, bring it across. It came right in there. It wicked right out of the box and continued. This now, okay, so now this is where I talk about going into the future. We've established a zone here. This is where now, the woulda, shoulda, couldas, like here, this is already done. But now, if I bring this box over here, the price is right up here today, okay? At some point, maybe it does come down here in the next couple weeks or months or years, who knows? But when it comes down there, that might be another bounce opportunity and come back up. If it breaks below this, after holding 1, 2, 3 times, maybe more and more and more supply comes down and breaks it, then we come back up with new bids in the market down here. But then now the algorithm changes. This now can change the current order book. This might be now offers are getting populated here, and when it comes back up with the buyers, there's a ton of supply here at this zone. And then it gets rejected, and then we push down for a new low in the market. And now it's kind of like a reversal. This is a bullish to bearish reversal coming down here. But we don't need to worry about this because there's no volume even close to coming down here. So, but you see how we establish a zone and bring it across. So when the volume comes down here, then we're ready for it. I can set an alarm here on my chart and wait for that daily volume to come down here. I'm not a daily trader anymore. I like to scalp the markets. But if you're a daily trader, maybe put an alert down there and wait. You're going to get alerted at some time. Maybe 1 month, 3 months, 1 year from now, but you'll be alerted. And then you know that this is a physical zone in the market. If we continue to break new zones, then just look at the structure. Okay, very simple. And don't complicate this where you place your lines. Everyone's like, Ron, my line doesn't match up exactly with yours. Who cares? Just try and understand the zones. I like to look at physical bodies before anything. So I'm looking at a body switch over. It closed and it opened right here. Okay, the wicks I have now inside the zone. And over here, it came up again, closed. Look at this spin top candle. Like, can you even see where it opened and closed? It's right on the yellow line. It opened, it came up, tweezer top, no new high. Okay, pay attention to those. These are, if you're a price action trader, pay attention to these. They'll give you a lot of clues in the market. And then when it came back down, I like to always look if it holds 50%. And it did. It was a higher low and came right back up. But look at where it closed. Right at that line. Next day, it came up again. Lower high, lower high. Even if it's just a small high, it's a lower high. Technically speaking, did it touch those equal highs? No. So the offers are being pushed down. And then it closed below the yellow line. Look at the retest. Came up this day right to the yellow line and got rejected and pushed down. This is the firecracker approach. Short wick, body getting rejected, rejection. Take a sell. Try a sell. Place your stop loss above those equal highs and run it. And then it comes all the way back down. But then when it comes down to the big green box, this is where you make a decision. A decision needs to be made. This is where traders get greedy. It comes down to an identified zone, but this is a big block in the market waiting. This is institutional traders waiting to buy this dip. So if you're a seller and it comes all the way down there and you don't liquidate your position, the market will liquidate the position for you. Okay? So if you're getting greedy, thinking it's going to break here, it tried, but it came down there and look, equal lows. Okay, I can't stress how important technical trading is. See that? Where this low on July 10 was exactly the same as that low. Exactly the same as that low. Okay, are you telling me that this is just by chance that it does that? No, it doesn't. The markets trade with bots. The markets trade with algorithms. There's no more humans trading the markets anymore. This is all predetermined. It's all set up. I got to watch what I say, but it's all, okay, guys, just understand what I'm saying here. Just, you see, equal low, equal low, equal low, no new lows. So therefore, what do you think is going to happen in the market? Okay, it's going to turn back up. So this is where, if you're a seller, you can close your position, take some profit out, and you can move back up with the market. This is like when you really understand price action, you can really ride these waves when you know what you're doing. Okay, but it's important to know to close a position at a particular zone, and you could be the one that's now buying it. So you could make money going down, and you can make money coming right back up. And when it comes to a specific zone here too, you got to make a decision, because over here, every time we came up here, we got rejected. We got rejected. We got rejected. Now, that's red, correct? Red box. We can do this on all time frames, anything. Okay, red box. When do we physically see volume closing above? When you physically see a body close above, this should be giving you, you should be looking now what's going on in the market. Because now we had an impulse, push down, impulse, push down, impulse, push down, impulse, push down. No volume close above. Finally, we get a body up here. And it's our, now when you learn more patterns, once you learn individual candlesticks, you put it together. The story starts to complement itself. So we have this. It was ranging in this zone from there, bouncing like a basketball. It bounced down here, came right back up. Did we break out of here? No. So the basketball comes right back down. Did we break down here? No. All equal lows. And then it comes right back up. And finally, we close above. So when we close above, the market can make a few moves up here. It can either consolidate. Okay, remember that word again? Consolidate. What is consolidating? When the market came in here, this is also a mitigation zone. Okay, I know some of you guys use all these concepts. Mitigation. Okay, what does it mean when something is mitigated or unmitigated? It's something transacted. Something happened up here. Okay, so that when the market came up here, it got rejected. It got rejected. Okay, over here, it came and got rejected. Over here, it came and got rejected. But we closed with volume above. So what I do with this zone is make this one, the red one, I make it green. Right? The volume is closing above now. Go through the motions. Make it green. Bring it across too. Okay, look what I just did. I brought it across. What am I doing? This was that bigger zone down here, but I just now figured out a new zone in the market, and I bring it across. Maybe, who knows, next week if the market is breaking down here and we're coming back down, that might be a good area to maybe possibly buy the market again if it's coming down there. Okay, so you see what we're doing? We are establishing zones in the market, and this is where it kind of consolidates. So that's where I have like a neutral box. This is where the market is now consolidating in here. Then finally we start to pull back, holding 50% of the body. We could have even bought this and things like that. So for example, if I bought that candle right there, okay, it's automatically going to populate it for a 1-to-1 risk to reward. Okay, that's standard. When you use this measurement tool for R&R, it measures it for you. That is a 1-to-1. So this is what a lot of traders don't understand, what a 1-to-1 is. Reward to risk, risk to reward. If I'm risking $1, I'm risking $1. My reward is $1, 1-to-1, even. Okay. If I risk $10, I'm looking to make $10. But we can manipulate this. Okay. You don't need to risk all that much. When you understand levels and price action, you don't need to have that much risk in the market. That's to allow it full breathing room. Okay. I don't necessarily trade with stop losses this big. What I do is I look at what the market did leading into this. Okay, so where do we have good support? Okay, this body right here that broke out created the new high. Okay, it came back down, and I like to look at 50%. Okay, I'm always placing like a line, individual candles. Okay, right there, 50%. You can kind of eyeball it. This candle that came up, okay, body to body. Half of it is right there, and it respects this wick, and it respects, look at the retest perfectly, right in 50%. Okay, and that's the candle that closed above. Now, when we're looking to take a trade, we see it come down into 50% to the green box. Bids, like if we were using also a live liquidity platform, you'll see the live block in the market and continue to accumulate and break out of here. So now, where's my stop loss going to be? If you want like a tight stop loss, you could be right below here. That's pretty tight, okay? Because one more candle, if I buy this and then it rotates right back down, it might come back down to take some more liquidity or be like a double bottom down there. So you might have to maybe look. Some traders go below the next bullish candle, like they may place a stop loss like below that one, okay? So myself too, I'm always like looking at the next big body, like 50% right there. So open, close, there's half of it. Okay, so if I'm taking that trade, for example, I'm going to show you how you can now fix your risk. Okay, that's the one-to-one. But now I have levels. So remember, and you can judge when you get into a trade. Like if you take the trade and then it starts going into profit, then you can start to reduce your risk by going to a break even. Then it's a stress-free, emotional-free trade. That's a tight stop loss, okay? Because you're just giving it enough room to breathe where it might pull back and then come into here, take your stop out, and then continue moving up. So if you want to give it a little bit more room to breathe by following price action, like here, this was the second leg that started this double bottom, and you're kind of right in the heart of this big body candle. So if most of the support is holding here, if it ever pulls back, in order to keep this trend moving, continuing upward, this area needs to get respected. Because if we break this, then it might lose all momentum down here, then start breaking, and then you're in big trouble holding a buy. So you kind of want to hold it through here. So if you bring your stop loss down below there, now I'm see my risk to reward, it changes. Now from a 1-to-1, it goes to a 1-to-4. Okay, so that's improving your risk management. And then as the trade goes into profit, you don't need to leave an open stop like this. I see some traders, they're up 100 pips and they're still holding a 50 pip stop loss. You know, part of your job as traders, rule number one, is to protect your capital. Nothing more important than that. You have to protect your hard-earned money you put in these markets. Not everybody's trading with a prop firm. Some of you guys are trading with your real money in the markets that you work hard for every single day. Don't leave it open, and don't go to sleep with an open trade with no stop loss. You might wake up in the morning and your entire account is gone. We've seen it before. Everyone's probably done it at some point in time. Be very smart about this. So as the trade is going into profit, start to reduce your risk. You can come up to that yellow line. So right there, you still have a stop loss just in case, but you now look at your like risk to reward. Now it changed almost 1-to-4. Okay, as the trade starts going into profit. Okay, and then what you can do is ultimately you want to go to a break even. Okay, but you got to give it room to breathe. Once it goes up about 20 to 30 pips, depending on what time frame or security you're trading, try to go to a break even. Okay, and then your next job as a trader is you can scale out at certain levels. So when this let's say for example we were in this big body candle and it closed right here. So what do? I look at 50% right there. I can put my trailing stop loss now in profit right up to there or just below it. How many pips would that be on a daily candle if we bought down here? Maybe we're securing 275 pips are secured in the bank. No matter what happens, if it comes back down, we got 275 pips. That's good. But if it continues to push, look it, was there a pullback come down into 50% here? No, it was almost like an ignited bar, continuing to break a high and pop a little further. You can now take your trailing stop loss and be below this body of this candle. Now you're securing all of this. That entire body is secured and you're just continuing to move up with the market. If you continue to do that, and you came up to 50% of this candle, you're still live. The market is still pushing up. If you went 50% now, unfortunately, like on this day, it came and you got stopped out. But look at how much money, pips, you secured right there. You secured all of that. And eventually you got tapped out. Okay? It's going to happen. But sometimes when the momentum is going your way, just naturally look at the way how it's moving. It didn't even pull back. So it's nice if you can get a trade like that. You're not always going to get those trades, but this all developed off of this pattern. Okay, so now we have our established zones above and below if anything happens. But now, like if I want to get into trading today, like right now, so we have what happened today. It opened, our high, purple line came down. There's our low right down there, right at the green box. Okay, so I'm going to place a purple line here too, so I know my highs and lows of the day. Now, I can see from trading yesterday, Monday, Friday, Thursday, Wednesday of last week, we got some critical areas in the market. Right away, my eyes are gravitated towards this area. I don't know why my eyes look here. They look here. Why? Because critical body and a body. On this red day, it came all the way down here and closed right there. Next day opened green, came down, and really respected this area. So I put another yellow line here. Look on this day, we came all the way down and we closed at that yellow line. Look at the next day, we opened right at that yellow line. Look at yesterday, we came all the way down red, came all the way back up and closed as a hanging man candle right at that yellow line. Today, we opened right at that yellow line. We came up, we came all the way down, and we came right back up to the yellow line. We are at a critical daily area in the market. We're going to see in the next 2 hours and 42 minutes where this daily candle will close. Will it close today above this yellow line? Will it close today below this yellow line? We still have a lot of time left in the market. So now as a scalper, if it continues maybe this afternoon, push down bearish and come back down, where are some logical levels we could come down to? Maybe I place a yellow line right here. Why? Because here's a body held here, a wick held here, a wick held here, a body here, a candle that opened here, came up and closed below there. It's a critical area in the market. Now I measure that. Like I know now I'm looking at my zone. Now this is called reading the tape. From yellow to yellow. Sorry, I just want to answer a question. Sadiq, search, why are you looking daily when you never trade daily? Okay, so you see what I mean? We're working our way, setting up our charts so that we can go to the lower time frames to trade. But sometimes when I do that really quick in 3 minutes, no one has an idea of what I'm doing. So I'm trying to take it easy today. We're going back to the basics to learn how to do this, okay? Maybe you joined us late, but that's what we stated we're going to do on today's call, okay? So we're breaking things down slowly so everybody can learn. Because if I do a top-down analysis in 3 minutes, I'm going to go very, very fast and it might go over your head. So I'm trying to break things down, okay? Slowly. So that's another physical area in the market. And then if we come back down into the green box, I have my green box. I can maybe place like a yellow line to give me a heads up when it comes in here that maybe like right here. That low. Today we broke, or yesterday we broke it. It did create a new lower low, but it came right back up. So now I got some daily zones. Now, as Sadiq just said, why am I doing so much daily analysis? That's correct. I'm getting myself ready to trade, to scalp these zones, okay? And what you can do is, with your charting, you can leave these levels all day, every day. And you don't need to continue to clean up your chart. I do that for you guys. Like every time we get on a call, we start with a brand new chart. But if I was trading US 30 by myself this entire week, I would leave my zones like this. And I would just watch the 5-minute volume, how it reacts at all of these zones. Okay. But I remove everything for you guys so we can start fresh and learn again. But some of the guys in our group, they do their charting on Sunday or Monday early in the week, and they leave it till the close till Friday, and they just trade the volume in between. Okay, so that's what you can do. I have a lot of intricate lines on here because I scalp lower time frames. If you're more of a swing trader or an intraday trader, you don't need to have all of these daily lines. You should be focusing more on the 4-hour or hourly. So we can go into the 4-hour now and break things down even more. So if you're a 4-hour trader and you want to be like a a trader that holds positions and you're not stressing out like us scalping the markets, here is a potential move. So when you set up your charts, watch the 4-hour volume, how it came in here. It came in all the way down here on Friday, August 4th at 2 p.m. It closed down here. Look at how it opened. This is a harami candle, not a thief, not a harami, but it's a clue candle. Okay, it gapped up, open, and closed inside the body. This is a clue that maybe the trend direction is possibly going to change, and it did at this big daily demand area. So if you're a 4-hour trader and you're picking up on this move, you can see a little bit of divergence too from this low to that new low, lower low. The strength indicator, this RSI indicator from here to here, it's slowly just increasing or equal lows. So that's telling me there's some divergence in the market. So that's predicting that maybe there's going to be some strength coming in. So if I'm a 4-hour trader, if I buy any one of these candles, maybe place my stop loss below this previous low or down in here. And my target is to come maybe up to fill this wick. It filled, but did it pop? No. So what do you do as a 4-hour trader? You came to an identified area, cannot break any higher, close your position, and maybe you could have sold coming right back down. When it came back down, you could have bought coming right back up. Look at today, how nasty today was. It came all the way down here and went all the way right back up. Look at this new 4-hour candle. It's going to close in 2.5 hours. It's already bullish. Let's see where it will close. Up here. If it closes above here, we might have some momentum to continue coming up in the highs. If we consolidate down here, maybe tomorrow we're going to come back down into here. So if you're a 4-hour trader, you can be trading your zones as well. I'm not a 4-hour trader, but I like to look at hourly, okay? Hourly. I like to look at hourly zones, and then I scalp the 5 minutes or the 1 minutes. But if you're an hourly trader, look at how beautiful this looks. Look at how it's trading so nice. At this area, there's an hourly resistance. These are hourly candles. Come up here and push right back down. They came up again right up there. No new highs. And then push down. We came up again up to here. Lower high. Continue push down. We're coming up again. Let's see if this is going to be a lower high. And then maybe we short it again. If it starts to close above here, we're going to watch to see if it can break out the new high. But I can see this red box was that big daily supply, but look at now what's going on in the market. Hourly supply is being lowered right there, right there. Now bring this box across in the future, okay, and make it red. That's now your hourly supply in the market. See how it's lower? So I can see when it was up here at 35,700, they pushed it down. Offers are being lowered. When it came up there, it got rejected. Came up again, consolidated, pushed down. Came up again. Now, look at my hourly candles now at the purple line. So this is, bring this across. We're not there yet. Okay, so I see something developing over here. It came back up, got rejected, and pushed down. There is another zone in the market. Okay, right there, red, bring it across. This might get touched today, maybe in the Asian session, maybe in the London session, who knows? But we've established a zone. Do we find some support in the market now on the hourly? I can see some support. Maybe you guys can see it too. Over here, this was a fake breakout of that daily. It came down, went right back up bullish. Right over there, red. Over here, fake out. Came up green. Look, it opened ignited red. Didn't even take out the high. Just went right back down. Fake out. Coming over here. Now this candle closes above and we continue pushing up. This zone, continue bringing it across. Would be green turning red. Bring it across. This body closed above. Retested green. Continue to push up. Green box. Bring it all the way over here today. Okay, so just keep it below that yellow daily line, and it's 50% of this candle at 1 o'clock when we started the call over here. Look at 50% holding. Now you found a box, bring it across. This might get activated today at some point. Now see how I'm consolidating the ranges. Again, that word, I'm consolidating the volume. I'm trying to get the volume as tight as possible so that when I'm scalping it, I'm looking for the moves that might continue to break out build off of it and continue to move, or I'm going to just watch these areas. I'm trying to trap the volume as much as I can. Okay, I can even trap it even harder up here. So what I do up here is I can see something developing in the market. This is a new hourly candle that took out the high coming up here. But over here where the market dipped, it got held right there. That's an area of support. It's a pivot in the market. It held there. So I now, when I'm on the next, I color code my charts. Okay, I don't know why I do this, but I do this. Okay, so for hourly, I do white lines. Okay, so just to reiterate, I use purple for my high and low. I use other yellow lines for other critical daily areas in the market. And then I just use these boxes as zones. Green means support, red means resistance. Okay, but over here, I can see hourly bodies came down here, held, and then continued to push up. And then over here, it came, touched that white line, back up, came, closed below the white line, and no retracement to the upside, broke those 2 wicks, big drop. Now, look at here. The white line is now 50% right now from here to there. This candle is going to close in 33 minutes, but we're still above here. So we are creating another area of support below, like these wicks. And right there, there's a new green box in the market being developed above this one, above this one. So you can see slowly where we might be trading now in between this red box and this green box. And I can bring these across like this again. Now, where do we have some hourly resistance in the market? I can see visually here. See this big impulse breakout right up here? Okay, so let's identify that wick with a white line. What time of day was this? This was yesterday, power hour, 3 p.m. Eastern. It came up there and pushed down. Then we got our swap session, the Tokyo channel, then moving into the Asian session, and then we continued to come into London. Pre-London broke out, closed above. London market, like over here, 3 a.m., 4 a.m., retested it, 50% held, continued push up, but we didn't get no new London highs up there, okay? So then we continued to consolidate. 6, 7, 8 a.m. we start to get news. We get COMEX market open up. We get news in the markets, continuing bearish, continue push down. We had Wall Street open, 10 o'clock too, took out the highs into 50%, push down. Then big bearish candle, come down 11 all the way down here, and we're rotating right back up. So that's also a double bottom over here on the hourly. It came down, one leg down, came up. There's kind of where our neckline is up here, or this is a neckline, whichever one you're looking at, but this is the big one where they shut it down. And then we came right back down. Okay, so here's the second leg coming right back up. Now, we got to get it to, in order to close above here. If we close above here, this is where the market could do the consolidation. Remember what I was saying about like those double bottom patterns that break out of here? The market may want to close and consolidate up here. Again, if it comes up here, it's made a big push. Maybe it needs to catch its breath again and to consolidate. And when we look at the left of the chart, look at how it consolidated here in the past. It came all the way up here, big move, consolidating sideways, and then more offers and the buyers got tired, and then naturally the market shot back down. Came back down into demand. The buyers are trying it again. They're buying, consolidating. Again, a bullish flag pattern breakout of there. But look, it came up here in just after London today and could not even enter this consolidated box. And what did they do? Sellers increased selling, buyers got tired, and continue push all the way down. Buyers are trying again today at noon, today, coming all the way back up, 3 legs coming up. They've kind of engulfed this big 11 a.m. bearish candle, but it took 3 hours to engulf it, okay? So 3 hours of bullish volume just to take out one big candle. So maybe if it comes up at some point, we might consolidate, and then maybe it continues to break out and fill the zone up there. Okay, or it might get rejected up here, and then what could happen is maybe they might have momentum to break out a high, and then it gets rejected, and then all of a sudden we're shooting back down like this. And that could be like the impulse break to the high, take all the pending orders up there and grab that liquidity. Okay, so before I continue, when I say this, grab liquidity, do you guys know what I mean by that? Grabbing liquidity. Okay, a lot of traders don't understand what like liquidity is. Okay, liquidity is where the orders are, where the pending orders are. Okay, so there's pending orders. See here where it came up, got rejected, came up, got rejected up here. So there's liquidity waiting up here. Okay, so how can I show this to you visually? Like this. Okay, does this help, guys? Okay, so that money's dollar sign, whatever this is. Okay, this is where liquidity is sitting in the market, right up here. Okay, so that liquidity consists of buy limits up here. Think about it. Okay, some of you guys have a pending order in the market and you're waiting to get activated up here for a new breakout. I got a buy order in the market. Okay, I'll make it green. That's my pending buy order in the market. Okay, if it comes up here, I have maybe a buy stop, buy limits, whatever it is. I want to get activated. So I might have a resting pending order in the market. That's what these are. In like the book over here, these are resting pending orders in the market. So there might be a pending order up there. They could be buy limits, they could be buy stops, they could be sell limits as well, or sell stops. Okay, so there could be a trader who's looking to maybe short the market up there, and it could be sell limits or sell stops. So red. Okay, so we have buyers waiting up here to get activated to continue to go up. We got sellers waiting to get activated and push the market down, and then we have stop losses. Then also stop losses for traders who are buying and selling. There's stop losses up there. So there's money in this block up here. Okay, so the market knows that. Okay, the market makers know that. So let's say, for example, we were all market makers in here. Okay, we're not market makers, we are retail traders. But let's say, for example, you and I are market makers, and we have a big fancy TV or screen, and it shows us all of the pending orders up here in the market, similar to this, and they can see the liquidity. And they could possibly engineer a move to come up here, push, 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 and take out the orders, activate all of them, everything, whatever is in here, whether it's the buys, the sells, the stop losses, get all of the liquidity. Then once they got the money, they can decide what they want to do with it. They could continue maybe doing a move like this, where it pulls back into this zone right over here. And if this holds and more bids accumulate and more buyers populate, then maybe we're going to get the next move coming up to the red box. Okay, that's one possible direction. But sometimes when there's what we talk about stop loss raids or liquidity hunts, stop hunts, it comes up here and they trigger all of those orders, they engineer it, and they come up here, take out all the liquidity, and then they go opposite direction. And then they bring it all the way back down. Okay, and what is that? That is a fake out. Okay, it's an impulse coming out. Okay, we all get excited sometimes, fear of missing out. Oh my God, we got to buy this because it's going to continue to go up here. But that's exactly what the market wants us to do. It wants to take our money. So we get in on an impulse. We don't wait for this body to close. All of a sudden we see a sharp rejection, an FU candle, we call it at Stocksnipertrading. It's a nasty wick coming up there, and then it reverses momentum hard, and that's where you get then the big drop. They've gathered, they cleared the board up there, they got the liquidity, they swept the highs, they took out everything and then continued to push down. Okay, some of you guys that learn different methods of trading, like smart money concepts, ICT, I'm not too familiar with those things. I'm just a old school price action trader. All of these different concepts, like some of you guys, what do you guys call this? Okay, some of you guys that are in these other programs, what do you guys call this? Okay, I'll tell you what I call it. I call it a raid, stop hunt, liquidity grab, FU candle. Some of you guys call it change of character or break of structure or all of these things. I have no idea what the words are these days. Okay, I'm admitting that I don't have the time to learn all of these new terms. I just go through the motions every single day. I see the same patterns daily. I don't care what they're called, to tell you the truth, because that's what I feel some traders are getting confused with, whether this is what this is called or this or that. Just focus on what's going on behind the scenes. What do you think is going on? Maybe that will help you see things in a better perspective. And then these things like fair value gaps and things like that. So like over here, like this bullish candle that came through here and opened and then pushed. See this like this body of the candle? It's full. It's full. So like some traders will draw a box from here to there and bring it across. Okay, and then that's orders that were not picked up. Okay, it's full of volume. The market moved so fast where it retested because there was so much asking on the price that it continued to push up. See these orders? They weren't tapped. It's full body. Okay, so at some point, maybe the market wants to come back down and tap into that zone. And then that's where I'm buying, you know, like 50% of that body. If it retraces all the way back up there and holds this demand and it's a higher low in that block, that's maybe where I want to buy. Because maybe that's a good area, good value to be buying. Why? Because this volume is unmitigated. It hasn't been tapped yet. Okay, this pullback, when it opened, should have came in here and picked up all these orders. It didn't. So these orders are still in the market. Okay, what does that mean? Money in the market, right? There's money right here. So sometimes the market now will fail to break, and then maybe it needs to come all the way back down to pick up these orders that were not picked up, and now they got that volume, and then now they're going to try another attempt to break the highs. Does that make sense, guys? Okay, we'll explain this more live, like on lower time frame candles, but you guys understand this concept, what I'm trying to show here? Like I need to know feedback, because if this is going over your head, then maybe I'm going too ahead of myself here, because I want to stick to the basics. This is getting a little bit more advanced here, but as long as you guys are still getting it, I still, that's a zone. But this is below us. Okay, we have another zone. What about this one? Okay, you see this candle that closed right here, the pullback. Did it come and tap into here? No, it didn't. Did it come? So it was a lot of asking on the price, and it continued to move. So right here, see this from the below the wick and this body to that wick? There's another zone in the market. Okay, but this one is resting. This is resting. Maybe it will get activated at another time. But we've got this zone in the market right over here. Okay, so right here too. See here, from when it pulled back into here, did it come and mitigate in here? No, it held this big body candle. So maybe there's still some resting bids or orders waiting in the market over here. So if the pullback comes into here, I like to judge what happens in this block before it comes down to this block. Okay, does that make sense? So we're developing a bigger block above this one. Okay, even with this candle. Okay, so wherever this candle closes, maybe we're going to find where it closes and then find a new block in the market. Okay, but liquidity will just keep going below areas, and the market will want to maybe come down at some point and take it out. We have liquidity building above here now. Okay, it's building. You can see like resting demand in the market. So if the market is slowly coming up here, it might be coming to tap that liquidity. Okay, and then it might come up here, make a new high, take out the money, but then we got to see if it will come for a new high. If it's a lower high, it'll get rejected and come right back down. Okay, so make sure we learn. We're going to do this together. Okay, so I'm just telling us what we're going to learn. We're going to learn all about liquidity hunts, sweeps, raids, whatever you want to call it. Everyone's got their terms, okay? But just understand what is going on. Whatever you want to call it whatever you want. But just understand value areas in the market, gaps and things like that, where there's still a lot of pending orders that haven't been tapped. And that's where the market wants to go to. The market is attracted to liquidity. Okay, that's how the markets move. We want to figure out where the big blocks of liquidity are, because that's where the market is attracted to go. Look at down here, like in the depth of market right now. See down here, 33,300, 310, 320, 330, 340, 350. Look at there's nothing going on down there. Look how thin the bids are, because they're trading up here now. Okay, so this is very thin down here. So we don't have any big orders. They're all moving up to support this area. Okay, so now what we can do is we see the hourly move. Okay, we can trade hourly candles. If you want to trade hourly candles, just understand how long you might have to be in a trade for. Like if you bought down here, this is a 1, 2, 3, 4, 5-hour move that moved up 5 hours. Okay, this could be a 5-minute setup where this is a 5-minute candle, 5-minute, 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 5-minute. That trade might be 15, 20, 25 minutes. These could be 1-minute candles. This could be a 1-minute move. 1 minute, 2 minute, 3 minute, 4 minute, 5 minute for 1-minute scalpers. And when you get that type of move on a 1 minute, that's a fantastic move. Okay, get your pips and get out of the market because this thing could rotate down. We have rules how to trade too, how to scale out. Do whatever you need to do, but make decisions. Let's go into the 5 minutes now. Let's talk about what's going on in the 5 minutes. So I really want to focus on London, Wall Street, and like the moves today. So here's London over here. So remember our hourly white line. Okay, so 3 o'clock. London came up bullish, got rejected. If you're waiting, okay, you see it's an ignited red candle and it came back and closed below the white line, then it pushed right back down. And see where we were trading in the zone, it came right back up, held, double bottom, continued push up new highs. Yeah, you could have scalped that move, but it was just consolidating, didn't really break. And then you start to see where they hit the high of the day at 5 o'clock, 5 a.m., high, lower high, lower high, lower high, coming over here. Okay, so now we get into Wall Street. Okay, so we're pushing down, lower highs, but then Wall Street opens 9:30. Wall Street was messy today. Okay, it was a tough session. We're going to get these sessions from time to time. Okay, so if you don't feel comfortable trading in here, look at the zones. Okay, look at how dirty this is. Green, red, green, red, green. Fake out to the high up here at 10 o'clock. New hourly candle, fake the move, and then look at 10:05, big bearish candle. If you trapped all of this garbage today, okay, and maybe you're taking some trades inside, you're testing it out, but I know it's after the fact. I hate doing this, but I love doing this when we're live. Okay, if you trap that entire shitty area, trading all this garbage on the 5 minutes, okay, 3 rules of price action. 3 rules. Okay, this is the sniper trapping gap that we coined years ago. It's 3 moves. It's either going to continue trading shitty inside this box and you're going to get frustrated trading all this unless you know what you're doing. Okay, I'm not going to say that some traders know what they're doing in here. They're buying here, comes right back up, they close, sell, like they're playing it like a basketball in here. But if you're trying to fight this or pick a position, you might get in trouble. Okay, remember, someone is going to get squeezed out of this zone. It's either going to be the buyers or the sellers. Remember, there's 2 parties involved here. There's buyers, there's sellers. Okay, there's always 2 sides to a coin. There's heads or tails. We got buyers and sellers. Someone will eventually get squeezed out of the market depending what the market makers are doing. Whoever is absorbing and accumulating more either offers or bids. In this particular situation, we just look at the structure of the market. Lower highs, fake out to the high. Continue to come back up, another lower high. Are we breaking lows? Now we're starting to physically break some lows. Come back. Here is a clue. 11 o'clock, 11:10. First body close out of this zone. Okay, that's the first one. Up here, we had a first body also close above here, above the hourly. Remember the hourly, the white lines, white and white. That's what I watch for. Here would have been a fake out. Yeah, we could have got caught buying this, but if you patiently waited for it to close and you understand what's going on with these bars, it's an gapped up ignited red bar. So this gapped up green bar, it opened gapped up green. It should have had some momentum to at least take out that wick. That's a clue right there. It couldn't take out that wick. That when this body opened at 10:05, that's it. They opened it up with some serious offers and it continued to come down red. I wait for a retest. You know, like if I'm considering buying this, yes, it did close above. But you know, when I see this, if I'm not in a buy, I always say, guys, I'm watching 50% to see if it will catch a wick right here. It didn't. It continued to come down. I always say, guys, I'm watching to see if it will catch a wick down here. It didn't. It continued to push all the way and close below the yellow daily line. So therefore, I'm not buying. That candle proves to me that you got to be cautious buying. And then it came all the way back down to the demand, held higher low from here, and continued to trade garbage inside here. barcoding, and then we finally get a candle push and close below. So let's try now. What is our next direction? It's either going to trade inside here, or it will break out, hold, and go up to here. Option 1 is trade in the box. Option 2, the bullish move. And what is our third option? Option 3 is the bearish move. Closing below, retesting this, and dropping. Those are our 3 fundamental directions, technical directions in the market. That's it. There's only going to be 3 moves. US 30 is not going to trade inside this box the entire day. I can pretty much guarantee that, okay? But it takes discipline. It takes patience. Now, if you don't want to sit at your computer or desktop the entire day watching this, set an alert up here, right up here at the white line. Set an alert, like what I'm going to do. Right click, add an alert. Yes, create it. Perfect. So I've created an alert here. Either if I'm at my desktop and I'm doing other work, I'll get alerted at some point in time when it comes up here. Then I can watch, again, review how it is building up there, what's going on. I could have also an alert below here. Have 2 alerts on my system. And then you can, I'm a mobile trader. I have TradingView next to my MT4. I can get alerts on my phone, email, whatever it is. If I'm not at my workstation, trade station, I can get alerts on the go. I could be at the grocery store and get an alert. And I see a 5-minute candle breaking below there. I see the retest. I flip my zone red, and we got to go through the motions now. So we get now, let's go through the motions. It closed below. Yes. Create a new low in the market. Yes. Candle opens up. Assume it's going to open up green in bids to come back up to retest. It did come up. Yes. But how high did it come up to? I always gauge 50% right there where my cursor is. Did it come up and tap half of it? No. It was a lower high. Short wick. Okay. We'll get more into entries as we learn more and more and more. But this is a perfect setup. We take our sell. Okay. This is 5 minutes. So I'll go into, we have guys in Zoom, you guys have the webinar, all entries. So that's a very, very like signature series webinar. I recommend everybody watches it because it will teach you all about entries. Okay. But now, again, I place this 1-to-1 on my money. Okay. Automatically. Do I want to keep my stop loss? If I'm in a sell right now, right here, number 1, where do I place my stop loss? Do I want it above these previous highs? I can place it there. I can put my stop right there. It's pretty tight. It's pretty tight, okay? Because if this move doesn't do exactly what it did here, it could have just came down a little bit, possibly would have rotated right back up and tested the red box in here, or 50%. Maybe they would have just spiked the high up there to the yellow line, and then it comes down, and then you're caught. You get stopped out, and then the market continues to push in your direction. That's happened a million times to me and you. Then we're just trading with a very, very tight stop loss because we're increasing our lot size. So that's where we panic. So maybe learn how to let trades breathe a little bit. Give it some room to breathe. Put it at a structural area so you're not guessing. Okay, remember we did a full top-down analysis of our zones, levels, these colored scheme. We're not guessing now. So this yellow line is a critical daily level. We start to see volume close below and continue push down. If I get into that trade right there, maybe my stop loss is at that yellow line. Maybe just a little bit above it. There is some traders, believe it or not, they put their stop loss above the liquidity hunt up here. This was that fake out. They feel comfortable putting their stop, but you're risking a lot. So your reward better be a big reward. But there is an ideal stop loss at the yellow daily line. You're protected by the daily level. Yes, you could get stopped out, but that's why you have to measure. If you go into a sell right here, if you're at the top of those wicks, you're risking 35 pips. I'm just showing you right now. If we're trading US 30, if we get into a sell right here, okay, sometimes I like to put a quick stop at 50% and go directly right into profit as a scalper. Sometimes it doesn't work like that. So even there, 50% of the body, you're still risking 15 pips. If you're at the top of the previous highs, 35 pips. Okay, and then if you're at top of that yellow line, you're risking about 50 pips. Okay, so think about that. If you're trading with a standard lot, 50 pips, $500. If you're trading right there at 35 pips with a standard lot, you're risking $350. If you're trading with a standard lot and you're risking 15 pips, you're risking $150. If you have a smaller account, that is extremely over leveraged. You have to trade within your own risk. Maybe you go $1 a pip. Maybe you go 50 cents a pip. Maybe you go 10 cents a pip. Who knows, whatever your account is. But make sure if you're measuring and you're giving it that room to breathe, Don't get upset when it hits your stop loss because you're within your risk. Okay, let the trade play out. In this particular situation, it didn't hit our stop loss or come close to it. So we go directly right into profit. And sometimes scalping maybe one candle. That's what scalpers look for. That body of that candle coming in the green zone is 65 pips. Okay? The entire candle, remember there's spreads or slippage, but maybe you get 20 pips, 30 pips, 40, 50, and then decision time. It came into the green box, it bounced up, it closed right here. Next thing, if you didn't get out, look it, just follow the price action. It's an ignited red bar. Okay, so if it pulls back, where would I be placing a pullback? 50% of the body right there. Open, close, half of it's right there. Maybe I'm reducing my stop loss, maybe down to that. Maybe I'm going to a break even now. Okay, so I'm already up 30, 40, 50 pips. I go to a break even. You see, we can sometimes nail a trade sniper entry and we don't even have to even think about our stop loss, but we still have to consider it just in case. Don't over leverage with your stop loss. Now that you go in profit, to go through the motions. Go to a break even when you're up 30, 40, 50 pips. All your capital is secure. You're in a profitable trade. Now, if you really want to follow the move and try and maximize the move, follow the bars. This bar opens ignited red. Did it open up green and come up? No. So right away it's red. How long is our wick? Measure the wick. The shorter the wick, and we have an ignited bar, firecracker, pop and drop. This wick is 20 pip wick. So we have to push down 20 pips just to fill our wick. And then we get our drop. Sometimes if this is a big wick, it's going to take a while to come down. So then that's where it might start getting bids and rotate right back up. But this was an ignited red bar with momentum. All of this accumulation was mostly sell side volume accumulating. Some supplier accumulated all of this and now redistributing it. So it continued. Ignited red, break the low, continue down here. So then if it goes down there, again, you can now place like a trailing stop loss at 50% of the body at that wick. It's really tight, but look at the market, how it came right back up. Did it tap in here? No, it came right back down, closed below. Again, pull back into 50%, continuing to push down. Pull back lower than 50%, continue to push down. Now, look at the market, okay? Remember we did our top-down analysis? This is that critical daily yellow line. This is the big green box. Let's look at our indicator. So if some of you guys are using indicators too, we're coming all the way down there, okay? RSI is... Look it's down to 20, 21. I don't really focus on RSI, but in particular situations like this, I do. Our 5-minute strength is getting very oversold down here, okay? 20. But we're coming to a big block in the market where buyers are waiting. So on the lower time frame, that's a massive drop. So again, if you're in a sell, maybe think about liquidating, taking some profit because it's not going to go down forever. You're coming into a bigger block in the market. And now we start to engineer a reversal move in the market. Look at how it came down there. They pinned it. It came back up, closed as a bullish pin bar. Now we rotate back down. Look at, we're building some support right at this level. Right here, right away. Green box, those 3 bars. Bring it across, right? Get in the habit of doing this, okay? Believe me, it will really help you as a trader, okay? So next thing is, as it comes up all the way up here, there's going to be, look at lower highs. Did we take out that high of 50%? No, lower highs. So mark your structure, okay? You can see it takes a few candles. Even looking to the left, this used to be support right there. It broke down. There's resistance. Bring it across. Look at how it played out perfectly in this green box. You could continue to buy. Now, fair values, zones, gaps, shit like that. Look at here, the big bullish candle that took out the high right here. What do we have below? Right here, the wick, and remember that body right there. There's a block of orders that did not get filled in the market right there. I'll make it with a neutral box, okay, to show you. So the market pushed up so fast and opened, pretty much ignited and continued to move away. These were orders. There was bids in the market here, but the market didn't, for some reason, didn't pull back to fill it up because the asking price was higher. There was like FOMO, fear of missing out. Got to get in. They want to pay a higher price. So the market goes where the action wants to go, wherever the auction is. So at some point when it pulled back, look at how it tap and go. It tapped in the box and continued to push up. Our next zone, like over here. So we continue with this big bullish candle, take out some new highs. So get ready for any pullbacks below here. Look for where here's a wick and a body right there. So our new zone, like unmitigated orders that are left in the market are right here. Bring that across just in case. If there's like a fake break to low, like if it comes down red, we lose this green box, it might come down into here and then shoot right back up. And that will continue the uptrend. We haven't tapped into these orders yet, okay? So they're still there in the book, but they haven't been triggered. So now we're just continuing to make consolidation. Sometimes if you're in a move and you see it trading like this, trap it. Wait, okay? Wait, it's just like that. If you trap this, you look to the left, there was another consolidation. Remember our directional rules. What are our 3 directions? If I get my son down here, he's 12 years old, he'll tell us the 3 directions. He's going to say it's going to trade in the box and consolidate. Okay, that's my son, 12 years old. He knows how to do this. Down here, what happens below here? If it pushes below here, we might come into that, remember that that box down there. So this is why we have to be careful, because if we come shorting into there, we might come right into that box, and that's where we look to see how it will react at this box. If we close below there, we got to go through the motions. We flip this red just in case it pulls back. Okay? And then we're in this box. It might now pick up all those orders, those bids, and naturally it will come back to resistance. Now, if this is a real move to short the market will sell. Okay, red offers. If they really want to push it down, they will engineer the move to push it down. It's up to you and I to watch it. If it goes down and breaks, then maybe it's going to come down to this zone. So then you and I maybe look to sell below this area. We look where to place our stop loss inside here, and then our move to take profit will be coming either down to this green box or the bigger one. Maybe it creates a new low, and then we come down to that daily low right there. Okay, that could be possible sell side, but we didn't get the sell side. So what is our third option? Consolidating. Option 2, sell, or option 3, buy. Breakout, close, retest. We didn't retest, we're still holding, continued move to the upside. Okay, so it's a nice pullback right into, what were we talking about? The consolidated zone. As we were talking about this, see now it's consolidating again. So this afternoon, what time is it, guys? Oh shit, it's 3 o'clock almost. Okay, so over here, we're getting power hour now. Okay, so we've got all our zones established. We can be patient and disciplined to wait for the volume to come to us, unless you're in a hurry to trade. But when you're in a hurry to trade, you're probably going to take some impulse moves. You're probably going to trade the worst consolidated areas. If you just wait patiently and you got your zone set up, let the volume come to you on all time frames. Whatever time frames you're trading, that's why I love price action. Because if you're an hourly trader, I could tell you these are hourly candles. If you're a daily trader, these are daily candles. Just up to you. Scalpers like to get in and out, sometimes hit a daily goal within an hour, 2 hours, and go on with their day. There's intraday traders that like to trade, hold positions. That's great if you want to do that, but learn how to do it properly. Now, what are we forming? It looks to me like this could be maybe an inverted head and shoulder pattern, or my left shoulder, the inverted V recovery head. Now we're right back in the right shoulder. So what could happen is this pattern typically has a high probability of maybe coming down, testing this box, maybe breaking out for a new high. But when we do, we got to watch what happens up here. They might be engineering it for a liquidity sweep to the high, and then they bring it down. Okay, so that's the beauty of trading. Every single day there's going to be a particular pattern. Some days are going to be trading much better than others. I always recommend you trade with the trend of the market until it reverses. Try that, guys. Remember I asked you to do that. Some days are going to be trading garbage like this. If you see that, trade smaller. Stay on the sidelines, see what's going on. Don't go hard and heavy in this. You want to start to trade this. Like, try and avoid this as much as possible. It's hard. You got to kind of train yourself for that. And like right now, it's trading in this box right now. Do you want to trade in here? Or again, do you want to wait for the next moves? And as we keep coming up, now look we're getting overbought on our side. This is now when I start to look, okay? After I've done my price action analysis, now I start to see, okay, maybe this could be maybe a potential area to maybe start to look for sells as the 5-minute candles are getting overbought. They're coming to a physical area in the market where it got faked out here, 10 a.m., continue push down. Maybe if this green box breaks this afternoon, maybe it might continue to push down. Maybe it just comes down here and respects this box and comes right back up. Then we got to look for patterns. Right now, this is a one-legged pattern. Okay, it came up right here, came up and back down. We're probably going to make a neckline now where it will trade sideways, consolidate here. Then what is our next possible pattern? It could come right back up for like a double top, maybe a liquidity sweep, maybe a lower high. And then it's kind of like an M pattern, and maybe we push, we break, we retest this, and then there's a drop. That's one possible pathway, but we can't make the move. We got to allow the move to come to us because there's so many variations of what can happen. It could do a move like this, where it came up, back down, we break down here, and we think it's going to drop, and then all of a sudden it comes right back up here, retest this, and then it's shooting for a new high up here. And then we just got faked out on a sell because we fell for that impulse break where it came right into this structure, caught a wick, and went right back up. So you have to be careful also at these zones. Maybe teach yourself discipline. Sometimes there's going to be an impulse candle that does break out. If it does, it's okay. You missed it. Catch the next move. Okay. I like to use an analogy. When you're waiting for a bus, okay, you might miss a bus, but there'll be another bus coming in another half an hour, wherever you live. There's always going to be another bus coming. You'll always hop on another trade. Okay. If you miss one trade, who cares? You forget about it. You missed it. Look for another one. Look for quality setups. Don't just look to just hop on every single bus because you don't know where that bus is going to take you. Make sure you have your destination. Make sure the bus you're waiting for is the right bus. If you're going to the mall, make sure you take the right bus to the mall because it might take you on the other end of the city. And then you're going to get into a trade where you have no idea what's going on because you took the wrong trade, you took the wrong bus. So focus on your type of setups. Focus on the quality, guys. I'm sorry we didn't look for any trades today. But I really want to get back into the basics with everybody, learning how to trade. There's going to be plenty of time for live trading with us at SST, with myself, Dave, and everybody else in the team here in the Zooms with Shahab and PK and anyone else that wants to step forward. So, guys, thank you. I have to wrap it up right now. It's 3 p.m. Thank you to everybody on YouTube. I appreciate you guys. I cannot believe it. It's almost 900 viewers on there, if I'm reading that correctly. Thank you, guys. If you can leave a like, if you got any value out of today's lesson, session, education, whatever you want to call it, okay? Back to the basics. Back to the basics. But thank you, guys. I appreciate all of you guys. Hopefully you learned something, okay? It makes my time worthwhile if one person learned one new concept today. If you learned one new concept, this is well worth it, okay? And then we're going to continue, like, teaching more. Well, we're going to go live. But guys, for the Zoom, the webinar is going to be much different. It's going to be more. Someone asked me, someone close to in the group said, Ron, we know you've been trading 15, 20 years. You probably picked up a lot of things in your day learning, and I have. I'm being honest. I've been very humbled by the markets, and I can talk about that. You know, so someone put me on the spot and said, Ron, you just, if everything you know and you started to trade today for the first day, how would you go about it with everything you learned in the past? So that's kind of what I want to do in the webinar today, guys. It's going to be a series. Today's going to be class 1. I'm going to just talk as if, you know, I wish I knew about risk management from day one. And I'm going to teach you guys about risk management right now, you know, and then we're going to move on to other concepts. We're going to take it like day by day, week by week. We're going to slowly build this together. So it doesn't matter what stage of trading you are at. If today's your first day, it's perfect. Today is the best day to learn this because we're targeting new traders as if today's your first day. If you've been like me 20 years in the market and you still want to learn, welcome. Come on in. It's open for everybody. It doesn't matter what level of trader you are. It doesn't matter anything. All I want is, guys, put aside making money. We're not here. This session is we're going to learn how to trade like today. forget about making money. We will do that later on. When you learn how to trade, the markets are endless where you can make profit. Okay, but we're gonna go back to the basics, kind of how I want to structure this, I hope it honestly helps a lot of traders. Okay, I wish somebody was there to do this for me 20 years ago when I needed this. So now there's no excuses. SST is here to help everybody. And on YouTube, guys, we're continuing daily with you guys. Just continue learning with us on YouTube. We ask for a like. Thank you again for the donations, but we don't need that here. We appreciate it, but I'd rather you keep your money in your account for you to trade with. But appreciate it, guys. And on Zoom, guys, we'll see you guys in 3 hours, 6 p.m. Eastern. I'm going to keep it today just like an introduction, maybe an hour, 90 minutes, because we cut into PK's time last week. I don't want to do that. If I find that these sessions are like long, like 2 hours, 2.5, we're gonna move it to maybe Thursday nights so we don't interrupt PK's Asian session. Okay, we'll play it week by week, and maybe these sessions, maybe I'll get 2 of them a week, so we learn fast and we get going. Okay, guys, so thank you guys. I appreciate all of you guys. I hope you guys did really well trading today. I saw some of you guys in the Discord. You guys did really well. Hit your profits and just learn, have hobbies, learn how to keep yourself occupied, learn how to keep yourself busy. So if you hit your goals, you're out of these charts. Okay, my advice for everybody here: have some hobbies, do some things to get you out of these markets when you hit your goals. Because some of you guys are hitting goals like in 1 hour, and then you're messaging me and say, Ron, what do I do with the rest of my day? Like, that's the thing, guys. You got to have some things to do for the rest of your day if you get in and you pip and dip out of these markets with your daily goal. Okay, but thanks, guys. I do appreciate you guys taking time out of your day to spend it with me here. So I appreciate it, guys. I'll see you guys on Zoom in just a little bit for our webinar, and everyone on YouTube, thank you guys. We appreciate you guys as well. We'll see you guys tomorrow. So thank you, guys. God bless everyone, and see you guys. Have some fun today. Okay. Thank you. And be careful trading power hour. If you guys are trading, here is power hour possible drop. Okay. But be careful, because today this move was trending up. Higher highs, higher lows, higher highs, higher lows, higher high. Maybe it's going to do some price discovery to find maybe where there's a new higher low and maybe reverse back up. Maybe they're going to push it down this afternoon. Okay. So just trade safe, please, guys. Thank you. Have a good day, everyone. Thanks a lot, guys. See you in a little bit on Zoom, guys.
Hey guys, good morning. Welcome to another live session of Stocksnipertrading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please. Secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.